All right, so today is June 8th, 2021, 22 actually. So today, today was this part, which is the weird part, was the best part of today for me. This was okay, and then this part, no, not this part. I screwed this part, and what I mean by screwed it was I got emotional and gave everything back trading this part. Now, I'm recording this. Obviously, it's shameful, but trading should. I'm not gonna focus on that. I'm just gonna focus on why. This recap is just so I remember what I, why I did what, not why I did, but I know I should never be doing what I was doing here. And that essentially was one of those things. It's like, you know, you start doing dumb things lead to dumb results, and then you start giving everything back. And I gave everything I made over here. I made about over $3,000 trading this, and gave everything back over here. Actually lost some money here, made it back, that kind of thing. And I think doing this just ended up made me do this. And at the time when I did it, I wasn't looking, I didn't have any of my boxes drawn, and I realized I always do that. When I don't have my boxes drawn, I tend to make these mistakes. All right, so just for those who don't know, why do I draw these boxes every time? It's because I'm trading the market cycle. So what does that mean? So essentially, let me get a whiteboard, and I think I explained this before, but I'll do this again because somebody asked me before, um, why why draw these boxes. So essentially, you can imagine the market is this. Let's use purple again. The market does a breakout, and then it pulls back, and then it tests one high, pulls back again, tests the final high, and then it goes sideways. And this sideways usually tests this first low, and then it goes back up, and sometimes it comes back down. It could come here to test this low, go up, sometimes goes halfway, comes down, breaks here, comes here, tests this low, comes back up, comes down. Okay, so um, each section, and I'm just gonna draw. Oops, I'm just gonna draw. It's very. This is just my feeble attempt at drawing a tight channel. Each section is a color. Okay, and they represent what the market is doing at that time. And because I know what the market is doing at that particular time, I know how to trade it. So how I trade this section is different from how I trade this section and how I trade this section. All right? Oh, nice. Cool. No, I didn't do it. Anyway, so each of the three sections here, you're buying for whatever reason. Here, you're buying pullbacks. Here, you're buying low, you're selling high. And then when you get back here, you're selling for whatever reason. Okay? So remember I said the blue boxes essentially you're scalping, the yellows you are selling pullbacks, and then blues you're scalping again. Okay, so that's literally the market cycle. So if I don't draw the boxes, sometimes things get a bit weird. Now, how do I start trading the day? The way I normally do it is, if I like today, the way today was actually interesting. I took it long just when it broke the MA, and I noticed we were just racing up. So I thought, oh, maybe we're gonna test this. We had a wedge top yesterday, spike pullback, 1 2 3. So we're probably gonna go sideways, probably up or down, which is exactly what this is the green. This whole thing is green. This section is yellow, and this is the blue from this. Okay, so anyway, we spiked up, we pulled back, went back up, tested the highs, and that was the thing. When I noticed we're testing the highs, I was using this chart. This is my tick chart. So where was the open? I think this was the open. Yeah, so we spiked up. Notice we wedged here. We broke out of the wedge, and then we started to do this again. And I didn't like this price action. Once we started getting bear bars, bull bars, bear bars, I just got out. I didn't even waste my time. But I made some good money there. Um, then we started to come down. I bought this low, went up, then came down, and I see it was collapsing. I was like, ah. And when it was coming down, I was like, okay, I could do two things. I could either stay here and buy this low again, or I could get out. And I stayed. At the same time, I went into MNQ or NQ, and I don't know whether I shorted it as a hedge. I think I did. and I got down here, made some money, and I was asking myself, why am I in this trade if I'm shorting NQ? So I got out when it got to the bottom, and of course that's when the bulls bought, because this is the bottom of the range. So this is the top where the bears are selling, the bottom of the range. So they bought over here. Did not even think of the fact that this is a higher low, but I remember I shorted here, came down, didn't take any profits, went back up, and I thought, okay, this is a spike, pull back, probably going to go back up one more high. Did not take any profits. Took another short, came down. I was waiting for it to come down here. It didn't come down here. Went back up, and my average price was lower because I was shorting the lows. And this is where I was making mistakes. I started shorting when we're going lower, like I was trading stop orders instead of shorting higher. Anyway, when we got down here, I got out, made a good profit, and I left it. Now, seeing this move makes sense because you have a wedge bottom. Not only that, you have a trend line. I mean, this trend line was obviously initially here, but as you can see, they bought the trend line. A lot of people bought it because they could see what was going on, and this caused this spike. I remember that we had a spike, a pullback, so one pullback, two, so we're expecting a third high. So I took a short just around here because I was like, this is a wedge top. Using limit order, my stop was just around here. It went sideways, went up, and I wanted to take a second position, but I forgot I was talking to my friends, and it came down. I thought, oh shoot, came back to my entry, missed that. And then it got to the moving average and wicked back up. I was on the tick chart. Yeah, it was this bar on the tick chart. Here we go. Went to the moving average on the tick chart and wicked back up. And I thought, oh shoot, and it did it twice, and I got annoyed. And then I put an order just slightly below, went back up. I got annoyed again. I just took my profits just around there. And look at what happened. We had the collapse after this double top. And I think at this point I just completely forgot what was going on. Now, trading ranges, sometimes they can last the entire day. I mean, like we had lasted the entire day. Or you could have a second range later in the day. But whatever the case is, they always seem to follow the same pattern. You always have a double top or a double like double top or a double bottom, head and shoulders, or something like that, where you have a test of that sort of thing. Test here, double bottom. Here we have a double bottom. We had a head and shoulders slightly. Maybe it's not. It's a weird head and shoulders. But the point is, I just did not even think about that. I was just trading it like there was no tomorrow. It's going to come back here, which is going to go sideways for the entire day. Did not measure the range. It was just trading out of emotions, and because of that, I was taking bad trades. But anyway, this started to collapse. Took a long roundabout here. It went up, came back down. I had another position here to go long. Kept on moving the stop, and I thought, you know what, this isn't going up. So I got out around here, took the short, took the loss. It came down, and then I took a short after that. Came down, recovered whatever I had lost down here, I think, or at least most of it. Then this happened, and at this point I was a bit confused because I thought, we've done this. This could be a what's it called? This could be a whatchamacallit. This could be a bear trap. But I remember Al said something yesterday. 1, 2, 3, 4, 5. This is 5 bear bars. You're probably not going to be a bear trap. Bear traps are a bit different. A bear trap doesn't have that many bars. Is it a bear trap? No. A bear trap usually is about 2 or 3 bars, but not like this is a bull trap. 1, 2, 3, 4 bars actually, or 3 bars. A bear trap doesn't have that many bars. So if anything, it was most likely going to turning into a breakout. And this is something I need to understand. Traps. Anyway, we had this. I thought we were going to get a second leg up. We did get the second leg up, and I started making stupid trades here because for some weird reason I felt I had to trade. I wasn't trading setups. I wasn't trading what was going on. I was tired, and I was just taking stupid trades, and that can happen sometimes. And I own up to the mistake, and I've made some corrections to make sure I don't do that again. But it's disappointing, head and shoulders here. It is disappointing having to putting yourself in that position. So anyway, we now had this. We had two-legged pullback. moving average, failed breakout of the MA. This was a good short. Did not see the bars at the time when this was happening. I was even thinking, I was like, oh, go long here, because I was in trading range mode. Wasn't thinking of the fact that we had just broken out, testing the MA, which is what you expect. You can sell bear bars from the MA or buy, sell strong bear bars, bull bars. Anyway, so we had this, and here was when I made the mistakes. I started scalping, but going along with heavy size, I got over. Um, I was emotional and angry that I'd lost very, very little, but I was angry and started taking stupid positions. Again, we had a stupid head and shoulders top, as you can see, and I did not even think to actually no, there's a head and shoulders, so I don't really do that. Yeah, I didn't even think to what am I doing? I didn't even think to just stop what I was doing. Anyway, when it got here and I got out, I just stopped trading for the day. I traded two accounts. One account I traded well, and I traded the setups on that account. On the other account, I was just emotional, and it's weird because it's the same market I was trading on both accounts, but one I was trading emotionally, and one I was trading, with my head screwed on. So all in all, it's an okay day, okay for one account, but not happy for the other account, and I don't like the way I traded it. As you can see, this itself was a wedge bottom, one, two, three, or maybe one, two, three. This is a spike, so one, two, three. Double bottom went up. Did a paper short down here, just really making a point of the fact that if I know what I'm doing in these boxes, I know what to do. So the fact that now I know that we had three legs down, this is resistance. Price is probably going to come all the way down from here. This is up from here. This is a nice signal bar. I can go long, test the moving average. Usually the first reversal, because it's tight, will fail. This is the next attempt to wedge bottom. Next attempt to go higher. Limit order buy would have been good here. Wide stop maybe below here, and then just taking this. The reason why I'll be confident doing that is just because all the breakouts have been, they're overlaps, so the gaps are closed. So whoever bought here or whoever sold here can get out here again, and because we've reached the price here and this is overlapped, so bulls can buy confidently knowing that if we buy here again, we're gonna overlap that. And look, even buying here overlapped it completely. So and then here it looks like we have a major trend reversal. But the point is that the price action was not foreign, was not weird. I was just the person who just screwed it up because I got emotional. All right, I'm gonna take this out. Don't need this for this day. Yeah, so that was my recap for today, and hopefully, I don't know if I'm trading tomorrow because I almost want to take a break and just get my head together. I don't like the way I traded today, and yeah, it really, really messed me up. All right, laters.